Hi traders, welcome to the live webinar with Admiral Markets. We're going to take a look at using market structure for trading. This is a very important topic because without understanding the larger, um, basically, developments that are going on the chart, you will not be able to kind of get to the next level of your trading, of your analysis. It's very easy to just focus on simple entries, let's say finding indicators that will make your trading decisions easier for a while. It's much better investment though to really understand the charts in a deeper way than just signals and filters and just adding kind of all kind of indicators without a deeper thought behind it. It's tempting to do that because it's simple and it's tempting to look for the, let's say, holy grail, the perfect trading system that requires maybe not too much thought and too much analysis. But if you choose to go a different route and actually understand the market structure, you really build a skill that is valuable for all time frames, for all charts and all instruments, and it gives you a more complex way of ability to look at the charts and understand what's going on. And you'll be able to find the trades that you have confidence in, that you can stay in the trade and be able to get a good reward to risk out of that. All right. So it's definitely a bit of a learning curve, but well worth your time. I would say it's very much worth your time. It's a critical, I think, part of developing as a trader. Not saying that that's the only way to be a trader, but I think it is the best way to move forward and critical for developing the skills you need. So that's we're going to explain what market structure is in just a second. This was just a quick introduction why I think it's so important. But before we move on, there are two disclaimers to discuss. One is explaining the fact that this live webinar is shown to a global audience but may not be suitable for everyone. Uh, Please take a look at and visit admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity for more details about whether this webinar is suitable for you. And second of all, please note that trading for exchange and global financial markets in general are considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, thank you for your attention on that. So, what is the market structure, right? When I talk about market structure, what am I talking about? So, it's as simple as three steps basically, and it allows us to look at the charts with more dynamic, with a deeper view. So first of all is trend. We want to know if there is a trend, what the trend direction is, and what kind of speed price is moving. Is it fast? Is it slow? And that will give us information about whether we want to trade with that trend, or maybe there is no trend and we want to trade in the range. This is important, generally speaking, to get a good idea about that. Some tools we can use: moving averages, Ichimoku, the trend lines and trend channels. You could think about some chart oscillators, like for instance Admiral Keltner, which is part of the Supreme Edition, and you can download that for free with Admiral Markets. And the Supreme Edition, as you probably know, but just in case you don't, is a special plugin from developed by Admiral Markets, and you can only find it here. There's a lot of extra features, 60 plus features. One of them is an indicator called the Keltner, for instance. So it's very useful for trend as well, I think. So if you just use a simple system, I'm nothing against simple, by the way. I should maybe be careful with my words. What I meant is like a, let's say, a black box system where you don't really know what's going on. You just follow some arrows, but you don't know the idea behind it. You don't know why, right? It's tempting, but because it's simple, right? But unfortunately, it doesn't allow you to grow, allow you to learn, and allow you to become better at what you're doing. When you get more experience in recognizing trends, right, you get better at recognizing what is a good trend, what is a strong trend, what's a weak trend. You'll be able to assess whether a particular pair or currency pair or instrument is at a good spot or not. And the more you look at trends, the more you'll be able to recognize these movements. What is a good impulse, right? And what is a good correction? Or what is a correction you would like to trade or not? Same thing for support and resistance. So trends, they tend to last. The trend is your friend until it bends. You might know this expression. So that's a useful part, but eventually trends will end. And it will be good to know where. And that typically happens where there's a confluence of support or resistance levels. And that's where typically price moves to, stops, corrects, or reverses. So knowing where this, let's say, zones are, where this confluence of support or resistance is key, because that's where the trend could end, or where the range could continue, or where the range could end if price breaks through a support or resistance. So this is the step 2. So once you have these two, you already have a good idea about the playing field, about what is happening on the chart. The third and last and missing step that many traders don't do, many, I would say, do the first two. Not everyone, but a decent number. Don't know how many exactly, but my assumption, decent number. The step 3 is price patterns, and this is a step that many don't do. I think my gut feeling, but this is kind of the glue that binds everything together, and it's very important because it allows us to understand what will happen when price reaches a support or resistance level in a downtrend. Right? It gives us a deeper idea about the psychology and the state of the chart at that point. So with price patterns, I mean all kind of patterns, candlestick patterns, chart patterns. I'm talking about Fibonacci patterns, time patterns. Um, and if you're not sure what I mean with time patterns, just look at YouTube channel from Admiral Markets, and there are previous webinars that are uploaded from Admiral Markets on that channel of Admiral Markets, and you'll find that. I'm talking about. Let's see, I'm missing some chart patterns. Chart patterns, of course, continuation and reversal chart patterns, obviously. Divergence patterns, of course, that's the one I'm missing. Divergence patterns, very important to know whether the trend will continue or not. If there are not divergence patterns, there's a higher chance of trend continuation. If there are, then of course the reversal chance increases. So those are at least 5 patterns that are very important. Break and bounce patterns, 2, 6. Probably even more, but at the moment, those are, I would say, pretty much the most important ones. So this will give us, of course, a very good idea about what's going on. So bullish engulfing candlestick pattern in a bull flag at the 38.2 fib, right? That's two bullish patterns at support within an uptrend. Well, that's very good info. That means that either we're looking for longs based on that, but based on that information, you would definitely not take a short. So if your let's say signal system shows a short somehow, with this knowledge, you would be able to avoid that bad trade most likely. All right. So once you've done your homework, let's say, and went through these 3 steps of analyzing charts, and we'll give an example, a live example, in just a second after this slide, then it is time to prepare our zones. So the first step is understanding the market structure of the chart, what's going on, as I just said, the 3 steps. Then, if you like what you see on that chart, whether it's DAX, Apple, CFD, or dollar yen, right? Doesn't matter, a chart is a chart. The next step is to decide how to trade it, if you like it. So what we want to see is the direction. Some charts I'm open to trade both ways. It's possible. right? In certain circumstances. Most of the time, I'm only looking to trade it in one direction. For instance, there's an uptrend. Let me show you. There's an uptrend like this, and price is making a retracement correction. So what is the direction I'm looking to trade? Up, right? Because there's a bull flag in uptrend, so I'm looking to trade with the trend if there's no serious signs of reversal coming close. So let's say there's no divergence and there's a strong confluence of resistance up higher. So there's still space to the upside. So step one is direction, and is there space? Direction is up. Yes, there is space. Good to go. We can move on to step two, which is the decision zone, where if I know that there's space and I know which direction I want to trade it, at what level, where do I want to trade it on the chart? So, for instance, there could be an uptrend like this, right? And I put a fib from this bottom to this top, and I say, okay, if price gets to my decision zone, which could be the 38.2 fib, that's where I want price to be. Because if it doesn't go that deep, it is not in a decision zone where I think it decision zone basically, I should maybe say it differently, is kind of an area where you know there's a high chance price will react to it, and it will either confirm or invalidate what you expected. So a decision zone is not, so if you see a triangle like this, right, and price is in the middle, that's not a decision zone. It could go either way. It's 50-50, who knows, right? And actually it can go up, down, and do all of that. And, it's not in an area where we think there's an advantage for us. But if it reaches the resistance spot, right, or the support spot, that's where there is an advantage for us to trade it as a bounce or breakout, because that's where we expect the market to make a reaction. That is a reaction that is sustainable, that is strong and decisive, not something that just goes sideways and doesn't show any volatility, right? So that's what we always want. I always wait for price to reach such a decision zone, because I know that there's a higher chance that price will make an actual movement at that area, in that area. So decision zone could be a triangle. It could be this fib where I'm waiting for price to reach. Okay. So then I determine that decision zone, and then the last step is waiting for a trigger. So that's actually for waiting for price to reach that decision zone, and many, or some traders at least, don't do that. They get nervous and they take the trade even though the price didn't reach the decision zone. Maybe this is something that sounds familiar, right? Uptrend, price, traders waiting for price to reach this level. Gets nervous because price starts to move up, decides to enter here, and price still makes that downside to their entry level. They got stopped out somehow here, and then they see their price move as expected from their decision zone, right? So this is something that happens when you get too impatient and you don't wait for your decision zone. What you do want to wait for is the decision zone to get reached, and then wait for some kind of trigger here that confirms the bounce. Now, you don't always have to wait for a trigger. It depends on your trading style. You could have a pending order there, for instance, but typically you got to be a little bit more experienced without working with triggers, because if price is falling and you have an entry order here, who's to say that it will necessarily stop there? It might just continue like this, right? Or go up and then continue like that. So it needs a little bit more experience. Waiting for a trigger, typically, not always, you would have some confirmation that price is turning, and there's a good chance that price will then continue. There's always, of course, a chance that it might fail. You will never avoid that, obviously, but it increases the odds at least a little bit. So this is the steps. Let's move on. And I don't know if anyone has any particular um, preference, but I guess we can start with the $0. So for instance, let's go through these steps. So obviously, $0 has been in a downtrend. We have a very nice series, right, of lower lows, lower highs, good downtrend channel, clear downtrend, no doubt about that. Good impulse too. Trend down. So step two is support and resistance levels, right? So for various reasons, uh, including this S1, which is a weekly pivot point from that same Supreme Edition plugin, by the way, one of the 60 features available, very useful. And well, that's one of the reasons. Other reasons, fib targets, fib levels, basically. All right. Um, so I'm thinking there was other things. I think I don't have the oscillator here at the bottom, but I think there's divergence between these bottoms, another aspect. So you got a couple of them already. And in my view, a little bit of exhaustion within the downtrend, most likely, at around this 118. All right. So support and resistance, well, strong, relatively strong support around 117.50, 118. Okay. Third, patterns. We have a divergence pattern. We have, I think, a little bit of an exhaustion pattern here with a kind of a head and shoulder, inverted head and shoulders pattern. All right. So divergence pattern, chart pattern showing that yes, the downtrend is becoming a little bit uh, less likely that it will continue, and that there will be some retracement or correction to the upside. So not always will the trend continue, obviously, and not always, even though you realize that the trend is down, it is not always ready to trade to the downside. Anyone trading the euro dollar to the downside here would have been in trouble, right? So with that knowledge, you would skip it, or any reversal traders or traders that like to trade reversals or don't mind to do that would be maybe looking for this upside. All right, although it's risky because it's against the trend, but at least you know that it's risky. So you might reduce the risk, etc. So let's go along with this reversal example then. So what is the decision zone, right? For instance, well, you could use the annual pivot point, for instance, and say, okay, a rebreak above the S1, a rebreak of this downtrend channel resistance line, a break above this local resistance spot, right? That's the neckline, basically, of that inverted head and shoulders, like that. All right, that could give the upside. That could be the trigger. What is this space? So we're trading a reversal upon the break there. For instance, this is an example, just to give you an idea. What is the space? Well, we can put a fib from here to here, and typically correction goes to minus 272 target, minus 61.8 target. So 119.40 would be a nice target to aim for, probably. So there is some space. Break from here up to 119 for about 60 pips, right? So it's like an intraday space, but still not a swing trade, obviously, but for intraday trading possible. So we have direction is up, counter trend. We have space, yes, for intraday. Decision zone is here, around 118.80. And the last step, decision zone, uh, space, trigger, sorry. Yes, of course, trigger. That depends, of course, on your system. Everyone will have different systems and stuff like that. But for me, I'm not sure because I don't have my system on this entry system, at least my trigger system here. But just looking at candlesticks, right? You would. It seems like this candle could qualify, or at least this one, right, or this one. And when you get this candle as a trigger, the entry doesn't have to be here necessarily. You can wait for price to move down to retest the lows here, for instance, or retest halfway the candle You can still have an entry around 118.80, for instance. And then, of course, we need to discuss when you talk about trigger. So this could be the trigger, but the entry could be lower, right? The entry could be a different spot. Stop loss could be, for instance, here below the lows, and we already know where the target is here and here. All right, so that could be this kind of trade setup, and that works out in this case nicely, right? But we can look at an example that wouldn't work out. Let's say you take a short here, for instance, right? You see a couple of candles go sideways, and you see a bullish candle like that, and again indecision. So, for instance, you decide to use trade management, and you exit the trade on this candle at about break even, for instance, right? Now, in retrospect, of course, that would be a pity because it did move lower, but you could say that the trend is down, no key support zone until 117.50, 118, so there's enough space. Patterns, this is looking like a momentum, this is correction. There's space to the downside. You're looking for downside trades here. You have space direction is known, space direction, decision zone. For instance, you could put a fib from here to here, so you know where you want to trade it, hit the 50 fib, and we get a bearish candle after the 50 fib, which is your trigger. Right? So this is all kind of the analysis that you can do for justifying a trade in here, for instance, as an example. All right. Oil. Let's take a look at oil, for instance. Okay. Commodity. WTI 4-hour chart. So what do we see here? Well, just looking at the moving average, we can simply say that price is an uptrend, right? Higher highs, higher lows. This was the angle, but most recently it actually started to accelerate to the upside. So definitely uptrend, and we see price making a correction like this. So this looks like a bull flag within the uptrend. So what do we have? We have uptrend. We don't have any particular warning signals of resistance. Let's say for the moment, I didn't do a deeper analysis to this, but for the moment, let's just assume that no resistance is standing in the way necessarily. Patterns, we see a clear chart pattern that's indicating continuation, right? So we looking at the market structure, and as you can see, it doesn't have to take that long to understand the market structure, right? In some cases, of course, you might want to do multiple time frame analysis, look at the daily, look at the weekly, look at the hourly to get a view with kind of more angles. All right, but ultimately it doesn't have to be that long. Then, so you get a sense, okay, so the direction is up. How about the space? So, for instance, you use a fib from here to here, and you say, okay, there's a move up to maybe the minus 61.8 target. Price bounce off the 38.2 fib here, hit the minus 272 target, it's making a flag. Next continuation could be to the minus 61.8 target, right? So there is space. You're looking for upside. I'm looking for upside. There's space. This is the space decision zone, of course. Sorry. So what is the decision zone? So basically, what are the decision zones? There are multiple ones here. Is at the bottom of the flag. That's one. All right, and we could put a fib on the entire move up like that. And another decision zone could be the 38.2 fib. It didn't get there, but the flag could be one. And the breakout of this correction could be another. And the break and the pullback could be another one. And perhaps even the continuation after the pullback could be another one, if there's enough space. So there are all kind of moments here, decision zones, that might be applicable, might be tradable, depending on the type of trader you are. So then, of course, the next one is the trigger. So let's take a look at the hourly chart. For instance, you do your analysis on the 4-hour chart. You might want to look on the lower time frame for trigger. So one of the triggers could be, let's see. All right, here, bullish candle could be a trigger. Here we have engulfing twins, could be a trigger. Here also could be a trigger. These bullish candlestick patterns, for instance, could be a trigger. At the bottom of that bull flag, right? Here, these bullish candles breaking through this resistance trend line could also be a trigger. Entry itself doesn't have to be exactly there. The entry could be when price, a pending order a few pips above these candle highs, or a candle close above it. An entry could be here, or we have a candle close, but we're looking for a entry halfway that candle. You could zoom in again to a lower time frame or a higher time frame to see how those candles look like and base your entry like that. So the trigger is kind of the green light, but the entry is the translation of that at a specific spot with a stop loss and a target and a trail, maybe a trail management idea, trail and trade management idea. All right, so that's the second example of how you can use the market structure and then translate that into a concrete trading plan. So this is what I was doing with the webinars of Admiral Markets in the live trading webinars, of course. Now we're having a little bit of a break, but this is what I was doing with these webinars, and this is what I'm doing with my trading on a daily basis. This is how I, analyze first, see if it's interesting or not. If yes, then I take, after analysis, if it's interesting, then I take an extra step to understand whether there's space indeed, what is the decision zone, then I wait, and then of course the last step then is the specifics of the trade. So are there any questions? Anything you would like to ask, check, verify, etc.? All right, if not, in the meantime, just quickly let you know how you can get access to that MetaTrader Supreme Edition right here. Just go to admiralmarkets.com, click on platforms right there, and get access to all of those extra features. Some of them I mentioned already right there. All right. And of course, if you're already here, you can check out more info about Admiral Markets, the regulators, FCA, etc., how you can start with trading, what you can trade, a lot of different products here, Forex, commodities, indices, shares, ETFs, bonds. And last but not least, check out the analysis from Ned and myself. Education, a lot of good education here. Courses, Zero to Hero, Forex 101. Definitely recommend that. All right, no questions. That's good. I guess everything is clear. If there are any questions, feel free to write after the webinar or in the comment section of the YouTube video. All right, or after, if you're joining the webinar live, you can always reach out through the email. So yeah, I hope it helps. I definitely big fan of this way of looking at the charts. I think gives a lot more value, like a more deeper way of approach. So hope it gives you that extra boost, and we'll see you next week. Wish you all good trading. Cheers.